Hey everybody, this is Jose Blasco. We are about to start in 30 seconds. This is a sound check. I would appreciate if you could just type a quick hello on the chat box. That would be my indication, my confirmation, if you wish, that you hear my voice, and all is good to get started. I believe all should be good. As always, I love to have that quick confirmation. So quick hello will do. Thank you very much. I will turn on the stream as well so I can position myself in the bottom right of the screen, and that way we can communicate a bit better in this session today. Very good. So here we go. We are live. I appreciate the confirmation there on the chat box. How are you, Joe? Good to see you. Happy New Year, everybody. This is the first session in our channel in this new year 2021, not only new year, new decade as well. So that's a big one, isn't it? So definitely looking forward to good and great and active and long term and all sort of trading in 2021, like every year really, and ready for it. Okay, so hopefully you guys too. You guys probably have taken a little bit of a break during the Christmas or the change of year holiday. I would expect most of you to have done that. So probably you are now full of energy and really eager to start. Okay. So Jan-04, 2021, you can see my name and my email on the right side of the screen, Jose Blasco. And before we get started, I only have one thing to do. As always, I would like to highlight the disclaimer so you can read it carefully. This is important information. Please read it carefully. And from there, we will begin the session in just a second. How are you, Tony? Good to see you as well. Sound is good. Wonderful. Thanks for confirming. Very good. So, my friends, ready to get started. The session is now officially introduced. And as always, mechanical approach to trading, even though we change year, that's the only thing that changed, the year. Because what we do is the same. We look for opportunities with odds in our favor while we manage our risk, while we manage our emotions, while we have a mechanical approach to trading, so we create consistent action that leads to consistent results. And that's why everything that we do is so critical, isn't it? Anyway, so for the ones of you that are new in the new year, and new in our YouTube channel, so let me zoom in. Every time I zoom in, by the way, I freeze the screen. Okay, so that way nothing is moving and I can point at things more efficiently. Notice that here we got futures markets on my left column, and we have different type of climates: 15-minute climate, 60-minute climates, and even below here we got the 4-hour climates. Okay, in the session we spend 45 minutes together, and therefore my approach is always to be as efficient as possible with the time, and practice and demonstrate as much as I can for you. In this sense, most of the times you will see me plan trades using the 15-minute climate, because while there are days where no trade is available, and that's okay, that's trading too. Our job is to discard more trades than the trades that we execute, so that's fine, it's part of trading. But while that could happen, that there are no trades available on the 15-minute climate, normally you would see more opportunities in a 45-minute window, which is what we have, and therefore my focus is normally that particular one. For example, right now you can see gold is flashing near sensible. Okay, so with no further ado, I will come back to this table. We call it a radar screen later on, but I'm just gonna go ahead and load gold 15 minutes and start analyzing the chart, because that indication means that a trade is potentially available. It doesn't mean the trade meets all our rules, and as I said a minute ago, our job is to discard more trades than the trades we accept. So in this sense, it may be valid, it may not be valid. We'll see as we go through the method. But notice how I loaded barchart.com on the screen. Why did I do that? Well, because it's critical when we trade futures markets to make sure we have the right contract, the right symbol loaded on our charts. And commodities are markets that have many expiration dates. As you can see, there are many, every month or almost every month, depending on the commodities. So what I like to do is, here on the website, you will have a recommendation that tell you G is the right letter to be used, but I like to kind of ignore that and look at the values for volume and open interest, and the row that has the greatest values. This is the one I'm going to use, which most of the time will coincide to be the letter on the top, but not always. Okay, so we have seen that in the sessions that sometimes it doesn't coincide. Okay, and I made that point. I actually make that point often because it's critical. If you were to trade the wrong symbol, it's kind of like you're trading the wrong market. Is that making sense? So it could be very problematic. You may get extra slippage. You may get physical delivery depending on the date. So again, that's it could be really problematic. Okay. So anyway, so you can see on my gold chart, I do have the G. So I am already charting the right contract, and therefore now it's all about applying the methodology, which let me zoom in one more time. The methodology will have me load AutoClimate, which, by the way, for the ones of you newer to the sessions, if you are not using AutoClimate, you should. It's a free tool. It's available for TradeStation as well as TradingView. TradeStation, it's not free software that you find out there. It's actually free to use, but you do need to have an account with TradeStation to be able to have access to the software. But TradingView, it's not a broker, and it's a charting service on the web, and you actually have a basic plan which is free, which is good enough for you to do your analysis. Okay, so you guys can have your AutoClimate for free if you don't have it yet. I would expect everybody to have it, but just in case you're new. So what do we do? Okay, well, we are looking at the 15-minute time frame, as I said before, and we are looking at the last dot on the very right, which is the present, and we can see the dot is thick. Notice that that one is thin, or that one here is thin. Okay, the one that we have on the left, on the right, that one is thick. That means the climate is confirmed. Confirmed means that we have a statistical advantage trading in a particular direction, and because the color is blue, the direction is to the upside. Okay, so when looking at gold during the next 15 minutes, I will be thinking long only. I'm not going to be planning on shorting opportunities with gold as of now, because the climate is confirmed to be up in the next 15 minutes, which, by the way, that's going to be, to be precise, 9 minutes from now, because 9 minutes later is going to be 11:15 in New York. Therefore, we'll have an update on the 15-minute time frame and therefore the climate. The climate could change. So even though it's not likely to change that quickly, it could. And if it changes, we will just react to it and now be ready to go short instead of ready to go long. Right now, we are ready to go long with gold. What else do we need to go long? Well, we need a buying area on the chart, which are our UFOs. The UFOs define, when they are green colors, they define buy zones. When they are red colors, they define sell zones. And those price points that those price points on the chart where we love to take our trades, we could use them by themselves, but to make it even higher probability, what we like to do is we like to make sure that those UFOs, in this case, because we are planning to go long, we will be looking at the green UFOs. So what we love to see is we love to see those green UFOs to overlap, or I should say envelope. That's the term I normally use, isn't it? So we love those UFOs to envelope the EMA that we have on the 15-minute time frame, which is just a classical 9-period EMA, which is currently pointing at 1943.3. Okay, so in other words, I will be looking at 1943.3, which is more or less here, and more or less here, and more or less here. And what I would be looking at for is a green UFO located where the blue arrows are. Well, bad news. There is no green UFO at that price point. There is a green UFO below. Okay, the top part of that UFO is actually 42.3. That's the top part of that UFO. Okay, but unfortunately, 42.3, it's below our EMA. And if I go back to utilize the term I used a second ago, which is envelope, well, the UFOs that we have on the screen are not, I said, are not enveloping the value 1943. Therefore, we don't have a valid setup. Okay, and therefore we are now in waiting mode. I mean, price could certainly come to the UFO and bounce and give us a beautiful trade. It could, because there are on-field orders. But the fact that the UFO is not lining up with the EMA, if you wish, removes some of the odds. And instead of taking a trade which is less probability, we prefer to wait until a setup develops. Because what could happen now, okay, and I'm just going to do a little bit of drawing if you don't mind, is that now price may go up, and as price goes up, next thing you know, a UFO now is formed on the way up, right there, and that one would coincide with 1943. That is the value that we're looking for, and therefore a few minutes from now, a few seconds from now, sometimes you will now be ready to take a new trade. But again, it's not what we have right now, so we are in waiting mode for a few minutes, a few seconds, or maybe the trade will be discarded later, we'll see. So we'll be monitoring this chart, knowing the climate is good, everything is okay, but unfortunately the UFOs available are not enveloping the EMA value. I'm going to go back to the red screen, because of course now when this happens, when I say you're in waiting mode, it doesn't mean that now, let's talk about, anything random just because we're in waiting mode. No, we're not going to be distracted with something else. We're going to continue trading. And the way we do it is we go back to the red screen and we'll be looking at other near sensible opportunities and get ready to trade. Okay, which right now, as we speak, nothing else is flashing. So actually, we could have a random conversation if you guys feel like it, even though I would prefer to keep going with further explanations, okay, in this session today. But certainly you guys feel free to ask anything you may have in your minds, okay? I mean, that applies anytime, really, not only because we're in waiting mode. But anyway, so what I was saying is we are in waiting mode with gold. Again, price may turn and show a UFO here any moment. And if that's the case, we'll be ready to take a trade. So one thing that it's important to do so you don't miss trades, it's to be ready. Okay, and if you think about the various components of a trade, so when we trade, we need to find a final target, we need to find a safety target, we need to find a valid entry, which in this case is a long entry, we need to have a stop loss, okay, and also we need to calculate the size, how many contracts. So we got 5 variables, okay, to be identified and calculated before we click the button. Now, the long entry, I don't have it because I don't have a UFO. So I don't know where my entry would be. And since I don't know where the entry is, I don't know where's the stop. And since I don't know where the entry and the stop are, I cannot calculate my safety target and I cannot calculate my size either. Because all of these depend on those 2 values, long entry and stop loss. So what's the only thing I could do? Well, I could find a target. That I could do. I could look for my final target and make a note in a piece of paper. So I am ready to execute the trade, later on. So where do we find the targets? Where the targets are found on the edge time frame, which in this case is the 15-minute time frame. And we find those targets by turning on AutoUFOs, but notice that we are doing that in the 15-minute time frame. Okay, and that way, we are giving our trades a larger room for movement in most of the cases. Okay. Now, what happens here is that I'm loading all the data I got on my chart, and I don't have a red UFO. So in other words, I don't have a target. Now, in this case, I only have 500 bars loaded. So you could say, okay, Jose, why don't you go ahead? Okay, let me disable AutoClimate. Why don't you go ahead and, if you look at the monthly time frame of gold, for example, okay, so notice that we are here, okay, and it seems that there is price action higher around June. So why don't you go ahead, Jose, and you go back to the 15-minute time frame, okay, and 15, here we go, and instead of loading 500 bars, why don't you go ahead and you load data starting from June? I could certainly do that. Okay, actually that's the right way to do it. Load all that data, and a UFO may show up above price. Okay, a UFO may show up above price, and here we go. Now we have it. I loaded enough data on the chart to find those UFOs. So what would my target be if I was to go long gold? Well, my target would be 1959. That's what my target would be for gold. And by the way, look at that, a UFO just formed. So actually, we have a trade to be taken, my friends. Let's see if I can be quick enough, because I was spending a lot of time explaining it. So final target, it's 1959. That's what we said. So let me double check everything. So climate, let's see, come on. So climate, okay. So the climate is still blue. Yes, the climate is blue. Perfect. Looking good. Climate is still blue. Reference value 43.2. This UFO has a starting point located at 43.4. So notice that being from 43.4 to 41.6, the EMA, which is 43.2, is indeed being enveloped by this UFO. So in other words, 43.4 is going to be my entry price, right? Did I just say 43.4? Yes. 43.4 is going to be my entry price right here with a stop below 41.6, which is going to be 41.5. That's my stop. So equal distance above. Okay, and I just got filled. So great. Equal distance above, which is here, is going to be my safety target. And my final target is going to be 59, which is quite far. And again, when we do intraday trading, those very far targets, are very cool to see on the screen, but the reality is that the market tends to close before we reach the target, so you may have to close the trade manually. But sometimes the markets are crazy and they move really, really fast. So, when you have a target which is so far, it's not necessarily a bad news, okay? It's not necessarily a bad news. So anyway, we are in the trade, okay? We entered at this particular price. Our stop is below, located at 41.5. Same distance above, and I see some questions there. I'm going back to you in a second, guys. Same distance above, 45.3 is our final target. Sorry, our safety target, okay? And our final target is located all the way at 59. So hopefully you guys are with me on the trade plan, the rationale behind the trade. Nice movement at the very beginning as the trade started. So let's see if all continues moving in this fashion, meaning the climate keeps propagating. That's what is expected based on probabilities. It's not a guarantee. So precisely because it's not a guarantee, I'm going to set up my time stop. Okay, I'm going to set up my time stop. So I'm setting up my time stop on my time-based time frame because it's based on time, isn't it? So notice that I got filled, I believe it was that candle. Let me double check. Yes, I got filled in this candle. That particular candle got a closing price, a closing time of 16. Okay, so 16, every candle is 2 minutes, meaning that the next candle is going to be closing at 18 and the next candle is going to be closing at 20. So in other words, now I'm going to be looking at the clock. And if 3 minutes from now, I haven't reached my safety target, okay? So what I'm going to do is I'm going to close this trade manually because I would assume that I have given enough time to the climate for the climate to propagate. And if it's not propagating, it's probably because the orders are being canceled or orders in the opposite direction are being added, which may reverse the climate. And I don't want to be caught in the complete wrong direction of the market. And therefore, I will get out manually with a time stop. Okay, so we got 2 minutes and 20 seconds to go. We are 4 ticks away from the safety target. Let's see if we get there. If we don't get there, I will close it manually. And by the way, closing it manually, even though now it shows $300 of profit, doesn't matter. It doesn't mean it's going to be $300 of profit. I may have to close it for, whatever amount of loss. Maybe I get stopped out because, we have a massive crash and in less than 2 minutes, we get a stop out. Anything could happen. But my point is, my what ifs are, if I reach my safety target, I'm going to be out of risk and I stay on the trade, riding the move, hopefully, ideally, all the way to 1959, which is my final target. Okay, we are 1 tick. Here we go. Safety target is hit. So we are now out of risk. We just banked, I think it was $160. Okay, sorry, $190. That is in the bank. And now we are going to be in trade management mode. So trade management mode has multiple aspects. Okay, so let me delete the time stop. We don't need time stop anymore. Here we go. Here we go. So now, trade management now has multiple things to be done. First, we will go ahead and measure, okay, the distance that I have from entry to safety target. Okay, that distance. Okay. We're going to project it higher, okay? And if we were to reach that distance without the creation of a new UFO, either here or here or here, then we're gonna move our stop to break even. If we have another move of the same size, going up, same size, okay, without the creation of green UFOs, then we're gonna move the stop from break even to what was safety target, okay, and we're just gonna keep following price times that size of a move, unless UFOs form that will allow us to move the stop ideally nearer to price and be more efficient with not leaving money on the table. Okay, so we'll see what's going to happen. So far, price is being a bit stuck there. It's not really moving much. So we'll see what happens. We're just going to be patient to manage this trade. Okay, actually, patience is going to be, having to wait. It's a great thing, actually, in the sense that this gives me the opportunity to take a look at your questions. I'll start with Joe while we are waiting for a move or a UFO to form. Because again, if the move goes against us and that gold crashes and hits our stop, we're going to lose 190 while we have already made 190. So you will break even. Okay? Cool. Okay. So, Joe, if I were to get a green UFO set up on any 2-minute chart, but price is below the 9 EMA on the 15-minute time frame, am I interested, or should I wait for a 2-minute UFO only above the 15 moving average? The rules I am using in the sessions is not above or below. The rules I'm using is the UFO envelopes the EMA, meaning a portion of the UFO is above and a portion of the UFO is below, but the UFO is enveloping. Okay. If you want to experience with any other rules, I mean, taking the trade above or below the EMA, as long as the climate is giving you permission, I would say it's not a crazy thing. But of course, you will miss on some additional odds in your favor. Why? Because the EMA often acts as new unfilled orders that will be added in the market that have not been added yet. Okay, that's why you see bounces around the EMS many times. It's because when price reaches a EMA, you got new unfilled orders being added. So if you already have a UFO where unfilled orders are already available and more unfilled orders are added, right? So this is more probability instead of relying on unfilled orders already available without counting on the potential addition of additional unfilled orders. Okay, so hopefully this makes sense. Now, as I said before, you could take any UFO. Actually, you can even ignore the climate if you want. But doing all of those things is gonna be subtracting odds in your favor. And then I will recommend you to backtest whatever variations of the rules to come up with a specific understanding of the methodology you just created based on your variations, and therefore you know what you got in your hands when you trade it with live capital. Okay, but again, the rule I'm using is enveloping, meaning the UFO is a bit above and a bit below. Okay, it's not fully above or fully below. It's a bit above and a bit below. That's why I'm using the term enveloping. Okay, let's see if we have a UFO. Here we go. A UFO just formed with the price 42.7. So 42.7 means that we're going to trail our stop under, which is 42.6. So 42.6 is right here. Okay, so notice we go from minus 190 to minus 80. So in other words, we made 190 before. Now, if we were to be stopped out, we're going to lose 80. So no matter what, this trade now will not break even. No matter what, this trade now will make 110. Okay. By the way, this is assuming that you have used 2 contracts like I did myself. Okay. Also, we are now reaching in this particular time frame this projection of price movement without creating any UFO. So in other words, I'm just gonna move now my my stop to 45.3, which is where the safety target was. Okay, so 45.3. So this is now an aggressive move, but this is what the rules are suggesting. So 45.3. Okay, so now I'm locking in another 190. So if I get stopped out, I'm gonna make 190 and 190. That's $380 no matter what. I got another UFO here pointing at 42.7, but again we are above that. Price is pushing. Price keeps pushing. Okay, so we are there. So again, now we are looking at the next one here. No new UFO has formed. I'm just going to do a little bit of math just to not to be caught by surprise. So we got 1945.3. This is our safety target. Our entry was 43.4. So 43.4 minus 19, 43.4. Okay, so this is 1.9 points. Okay, so if I add this to 1945.3, my next trailing stop would be 47.2. In case no UFO is formed. Okay. For now, no UFO has been formed. So we'll see. We are quite close to the stop. So we are at risk now of being stopped out for a nice profit. So it's okay. But again, looking for a push, either ideally with a UFO. It makes the moves to be more likely to continue. Oh, we've been stopped out. That's it. We're out. So my friends, we just completed this trade with $380 of profit if you had used 2 contracts like I did. By the way, the climate is still up. The EMA is still there. Could you plan on a new trade? Definitely. And actually, I'm not going to do it because I'm late, but maybe you are doing it. This EMA, it's now being enveloped by that UFO, right? All the way to 42.7. So you could re-enter this trade using that UFO with an entry and a stop and a safety target and your target 1959. But again, since I already did it and price is already in the UFO and I'm late for this one, so I'm just going to look at other market and hopefully this was a good experience to begin the year with. In the last session of the year, I don't know if you were around, I'm sure some of you were, we got 2 trades, we got 2 stop outs. So it was not the best way to end up the year, even though I left you with a homework, which was to take another trade on crude oil. And that was a very beautiful profit. Unfortunately, we didn't take it within the session. It was maybe, let's say, 10 minutes after the session was over, something like that. Hopefully, some of you enjoyed that one. Today, we are starting the session with a profitable trade, which is great to see. But again, it's not about making money or not making money in a trade. It's about following the rules, managing your mindset, managing the risk, following all those rules that make you mechanical, as I said at the very beginning. Okay, cool. So anyway, so what else is available there? Well, actually, the only thing that shows us available it's gold. But you know what? We got the euro contract here, which is sensible, and it's showing 0.72. Meaning the alert for near, the alert for green color, I have it set up at 0.5. Okay, so if I show you the inputs, notice how the alert is 0.5. The euro contract, okay, it's 0.75, meaning that if it drops a little bit, we're gonna have an alert. So I'm gonna kind of anticipate that because, by the way, everything else is hopeful right here. Okay, so those are trades that are less probability. So I'm going to pass on those, but the ones on the top are sensible, which means they are higher probability. So I'm just going to go ahead and take a look at the euro contract, just to create a bit of diversity as well in the session to help you better for when you guys practice on your own when the sessions are not running. And by the way, Tony, I see your question there. I'm going to see that in just a minute, okay? Good. Okay, I need to change the symbol here. So at ECH21. Okay, good. So what do we have? Actually, we cannot take this trade. Okay, I mean we could, but it's gonna be not the greatest probability. And let me explain why. So here is the climate. 15-minute climate on the euro. Okay, looking at the last dot on the right is thick. It's confirmed. It's red. It's a down climate. So you want to be a seller. The one thing I didn't explain earlier, which many of you know because I do it every session, but for the new ones, what I haven't explained earlier is those 3 values. Okay, those 3 values that we find here. Okay, so what do they mean? Well, the value on the right means how long the current climate has been running, which is 6, 1, 2, 3, 4, 5, and 6, right? Oh, sorry for that. I just hit the wrong key on my keyboard. So we've been in this climate for 6 candles, and you can see that here. Okay. Now the value on the left, we're gonna ignore it because it has to do with statistics for up climates. But this is not an up climate; it's a down climate. And what statistics suggest is that in this time frame, down climates tend to last 5 candles. Okay, and this is candle number 6 already. So could a climate last more than what is expected? Definitely. Actually, we have a beautiful example in front of us. So it says that up climate should be 7 candles, and look at this climate. How many candles we got there? I don't know, what is this, like 20 or 15? I don't know, we need to count. Way more than what statistics suggest. So is it possible that this happens? Of course it's possible, but it's not likely, which is what statistics actually represent, the likelihood of something, right? And of course, would you prefer to trade something unlikely, or would you prefer to trade something that is likely based on probabilities, right? So again, we don't want to be judgmental. We just want to follow the data we have on the screen mechanically, with no emotions, with no beliefs, with no biases, with no preferences. And in this case, statistics suggest that it's a bit late to get on board, because expecting this climate to continue evolving to the downside is probably expecting a bit too much, given the fact that we already surpassed the value that probabilities suggest to be likely, meaning we are now in the unlikely or less likely territory. Okay, so that's why I'm gonna pass on shorting the euro. Okay, cool. Let me take a look at the red screen. Gold is still there. Okay, so if you took the trade on gold, there was a UFO there before, isn't it? So if you took the trade on gold, price went up. Not sure if you have reached safety target or not, but probably close by. And on top of that, a new UFO showed up with an opportunity for you to trail your stop. And if you miss this trade, now that UFO is allowing the opportunity to enter, because it's 11:30 in New York, 11:31 in New York. You can see that here, right? 11:31 in New York. And you can see that with the updated value in the 15-minute time frame, 1944-2, it's indeed enveloped by this particular UFO right here. So, you guys can go ahead and take the trade. And if, let's say you just joined the session and you missed the one I took and you missed the one in the middle, so now you can take it here from the new UFO that showed up on the right. Okay. And while the climate continues, you're going to be in business. Okay. The moment the climate changes, you're going to be stopped out, and then you're going to be looking to do the opposite whenever the rules allow you to. Okay. So I'll take a sip if that's okay, guys. I'll look at your questions and then we'll continue with the charts. Thank you for that. Very good. So we have Tony. Your chart has an @ sign in front of GC-G21 for this screen. If you did not use the @ sign and just the GC-G21, would it be different? No, it will not be different, Tony, when it comes to the edge timeframes, the 610 bar chart, 377 tick chart, and 2 minutes. It will not be different because the amount of data I'm loading, it's very little. It's only 89 candles. Okay, I only need to have just a few candles on the chart. Is more than enough to find my entries into a particular climate, into a particular market environment. So because it's so very few candles only, then it's not going to make a difference. Okay, but when it comes to loading the 15-minute time frame, and most importantly, calculating. Not this one, here, calculating the stats for the climates, you want to have a greater amount of information, so you can do stats on more data. And what happens if you happen to load the GC-G21 without the @ and you just do that, let's say 1 day after rollover took place, 1 week after rollover took place, so you may end up having plenty of candles that are not the candles that you want to utilize to calculate the statistics from, because those candles were trading at times that were not liquid, because the prior expiration contract is the one that was traded. So how do I work around that? I just type the at symbol in front. The at GCG21 is a tradable symbol, exactly the same as GCG21, but when it comes to loading that on the chart, it will load anything you said, and the moment you get to the rollover date, then it will use the prior contract, and the moment you reach the prior rollover date, it will use the prior contract, and so on. And therefore, it makes your life really very simple. You don't need to worry too much about those contracts and expirations. Okay, so that's why I do it like that, Tony. Hopefully, it does make sense. If I explain it too fast and you need me to re-explain it, just let me know. Okay. Yes, got it. Okay, now I'm reading your second question related to the MGC, the micro. Got it. So if you're going to be trading the micro, my recommendation is not to chart the micro. Chart the proper contract and take the trades on the micro. In other words, notice how I have my matrix set up. So if you see the little symbol here on the top, okay, so I didn't set up that symbol with a specific color like the color I may have in those charts. Okay, I didn't set up with that, kind of like brownish color. Okay, I set it up with what is called local listener symbol link. Why? Because if I type any symbol here, okay, for example, if I type, so at ESH21, okay, for example, okay, if I type the S&P futures, so this is gonna reload the whole S&P futures, including the matrix. Okay, but if I type on the matrix only, notice I clicked on the matrix. If I was to type Nasdaq, for example, so NQH21, okay, it will change the matrix to Nasdaq, but it doesn't change the charts because this is set up as a listener, not as a local symbol link, and therefore that one does not have, the matrix does not have the power to change the charts. The charts have the power to change the matrix, but not vice versa. So why did I do it like that? Well, because now what you could do is you could chart GCG21, which is your gold contract, as we were doing it a minute ago, right? But now if you want to trade micro futures, okay, you would just click on the matrix and type MGCG21. And now what you have on the matrix, it's your matrix pointing at the E-micro gold contract. And now you're going to be doing those trades on the micro contract, while all the charting analysis and the price points that you select would be based on the big contract, which is where you would find the greatest quantity of on-field orders, and therefore the more reliable price information on the chart compared to what you get with the micro E-mini gold contract, which, again, it's not wrong, but it's less accurate. Okay, makes sense, Tony? I'd love if you could confirm what you just explained. Very, very good questions. Love it. Mark, how are you, my friend? Happy New Year to you too. It's very good to see you in the session, Mark. Joe, if I have a UFO set up on the matrix, including entry, stop, and target, but the UFO disappears prior to entry, do I still keep the trade on or do I take it off? You should take it off, because the AutoUFOs is a dynamic tool. And if the tool has one of the UFOs disappear from the screen, then it means that the processing understands that the on-field orders that were available are not available any longer. Therefore, taking the trade at those price points now puts you in a position where you have less odds in your favor, or I would say very little odds in your favor, because the very reason why price moves, which is the on-field orders getting filled, that reason is gone. So now you are really depending on a certain degree of luck, together with, hopefully the climate expands, hopefully with the EMA adds on-field orders where they got canceled, instead of the EMA adds more on-field orders where on-field orders were already available. Okay, so again, my recommendation at that time, would be to cancel the trade. Okay. And I know it's a pain because you already trading is a challenge in the sense that it's a waiting game, it's patience, it's discipline, and then finally you do your work, you do your analysis, you find the trade, you place the order, and now you're like, okay, I discarded this trade, I discarded the trade, I say no to this one, the euro was not good, whatever was not good, that one is good. you place the order and then the UFO goes away and you have to cancel. It's a bit of a pain, but not canceling put you at disadvantage. Therefore, the smart move is to cancel. Okay. Now, this should not happen often, by the way. Okay, this should be very rare. So again, if you again, you may laugh at this, but it could happen real world. And maybe you went to the restroom at the time and go back, and the UFO is not there anymore, and you're about to get filled, and you didn't have time to cancel. So could that happen? Yes. Good news, it doesn't happen very often, so you should be okay. Okay. Very good. Tony, thank you for confirming that. That's appreciated. Cool. Okay, so I'll get another sip of water and we'll go look for another trade, and hopefully we'll find one more before the end of the session. So let's go for it. So what do we have? Well, actually, we still have gold flashing there. Everything else here is hopeful. Okay, so again, based on the 15-minute time frame, no trade will need to be taken. Now, could you plan a trade on other future markets? Well, we could certainly look at the 60-minute climate, but notice, funnily enough, Murphy's Law, I would say, everything, nothing, I should say, is near. Or there is one which is near, but notice the gray color on climate, which is an alert telling you the climate is about to change or likely going to change. And the same is happening here on those three, where the values are gray, telling you the climate is about to change. That's why it's not highlighted with the yellow color, such as gold, where the value we got here, it's not grayed out, isn't it? It's a value, with a white color. Well, look at that. As we speak, we may have a change of climate on gold, maybe not. We'll see. Okay. Yeah, we'll see. Cool. So therefore, we got 4 minutes to go. Okay, and what I'll do is I'm just gonna take advantage to add a bit more detail of something that I believe is important, especially for you guys when you do your trading on your own, your practice. So if certain things happen to you, you remember my words, and if not, you can always, of course, contact us, shoot an email, and we'll be delighted to get back to you guys. But anyway, so going back to the climate, and by the way, okay, so this is a by the way on top of a by the way. We just got a near sensible opportunity, but I'm going to ignore it because the gray box here tells you the climate is not confirmed. So if you load the chart, I won't do it, but if you load the chart, you would see it's a thin dot. It's not thick, it's thin. So maybe in the next 60 minutes, because that's a 60-minute climate, so then the climate confirms and then that's it, you're good. But as of now, it's not. Okay, so you will need to pass on that one. But anyway, what I was going to say before we conclude the session is that the other reason why most of the times in the session here I'm focusing on the 15-minute time frame, not only is out of convenience, because it gives me more opportunities to execute trades and demonstrate and practice for you guys, but also because the lower the time frame, the narrower the UFOs tend to be. Therefore, the distance between entry and stop is less. Therefore, the risk per contract is less as well. And I would assume that certainly a decent amount of you guys are in learning stages or improvement stages, and therefore you may be in practice mode with certain markets, and you would probably appreciate if I give you markets of low risk per contract so you can practice more and better instead of trades that are very good, but then you may require very large accounts or only one contract at a time because it's a low risk per contract, a high risk per contract. So my point before we conclude today is to make sure that you all understand that if you move from 15 minutes to 60 minutes, the good news is that you get more markets to trade. But the bad news is that each of those markets should have a greater risk per contract per trade. On top of that, of course, because it's a larger time frame, everything moves more slowly, and therefore you got less trades per day. That's fine, especially if you're busy. Actually, that's a good thing. But again, the risk per contract will be more because we're using a larger time frame, so everything becomes wider. And if you do the 4-hour time frame, now you have even more trades to be taken, more contracts. But now, again, one more time, now you even have more risk per contract in most of the cases. So depending again on your account size, your level of experience, and how much you want to put in the market, Now you may not be able to take the trades, or you may have to do micro E-minis only or something like that. Again, just keep that in mind for your practice, for when you practice, because that's relevant, and that's the other reason why when we trade together, I normally tend to focus on the 15-minute time frame, because I believe that not only I can show you more practice and demonstration, but also the trades that we plan happen to be less risk per contract. The trade on gold that we did, for example, was $190 of risk per contract. That was the risk. Okay. Very good. So we are 1 minute away from reaching the ending time for the session. So I think that we're going to leave it here. As always, guys, it's been a pleasure for me to lead the session. Hopefully it was a good learning experience. And if you're watching this recorded, hopefully you're enjoying this too. And if you're new to the channel, so welcome. And you know what? One last thing before we go, guys. One last thing before we go. Especially for the ones of you that are new, let me load our website here. So I just want to show you something. So this is our website. I believe all of you should know this. Quick one, if you take our URL, tradewithufos.com, and then you add the name of your instructor, so /Jose, for example, could be /Jose, could be /Becky, could be /Boyan, you name it, any of the instructors. So the moment you click on the instructor name, a page will load. And two things here. If you haven't, get your free membership. Okay, so type your data here and get your free membership, because that way we'll send you emails with reminders, recordings, a series of things, and that's going to be useful to you guys. Second, if you want to book one-on-one time with your coaches, you can do it from here. But also, here in the bottom part of the screen, you have a Q&A page that we started using not too long ago, and it's growing very nicely with very good and very powerful questions. And I would like to encourage every one of you to come in here to log in. You see, if I log in as me, Jose, so I can go ahead and here we go. Now I can go ahead and post a question. Okay, so you log in, get a username on the website by getting your membership. Again, it's free. Then with that login, you type the question, type the answer, type the question itself, submit the question. You can upload charts or whatever, and then we'll get back to you. You'll get to see the answers here, and that way multiple instructors may get to answer your questions, as well as other students, other traders that maybe already doing what you're asking about or something may answer too. And also it creates a little bit more of everybody helping everybody. And by the way, you may get your answer sooner this way as well, because sometimes our email inboxes get a bit full. Okay, so just keep all of this in mind, my friends. And with all of this said, I will now say goodbye to everybody. Happy New Year one more time. Let's have a great trading year, which implies for sure discipline, a mechanical approach to trading, being kept accountable. Let me keep you accountable. Let us keep you accountable. Let's review trades. Let's take trades together. All of those things and more, guys. So keep up the good work. Love it. Love being your coach, guys. See you soon. I will see you on Thursday, actually, with options trading. But in the meantime, you will get forex trading tomorrow. You will get stock trading on Friday. So just join the sessions, guys, and see you around. Bye bye. Take care, everybody.